people that are very bullish on Bitcoin know that if you've been in Bitcoin for a while, it's very difficult to outperform Bitcoin. Bitcoin mining is literally like one of the only industries in the entire world where it's actually like possible to outperform Bitcoin. If you buy, AT&T or you buy Tesla, it's still going to be very hard to outperform Bitcoin over the long run. Whereas Bitcoin mining, there are these alpha opportunities where you actually can outperform Bitcoin, which is super fascinating.
Dude, it's so interesting. I'll add one thing real quick there.
Yeah.
A big, catalyst for extrapolate all the shitcoin type stuff from 2022, but there was a lot of yield chasers. And I think you and I fiercely agree that Bitcoin is a product, it's an asset that has so much potential in and of itself that don't get risky and chase yield, right? And a lot of these things are, not to go through the graveyard, but, a BlockFi or, a number of different hedge funds, like you lock up your Bitcoin because you're getting yield. Now, Bitcoin mining is basically an organic yield mechanism, right? If you think about this where you've got a CapEx and you've got an OpEx, you've got an asset and you've got a dividend, right? You can almost go, it's not crazy to think about it this way, that the money that you put into buying ASICs is equivalent to like the money that you would put into buying Bitcoin, right? And then the yield mechanism, which is basically the arbitrage spread that you have between the price of Bitcoin and the price at which you are minting Bitcoin, that's the yield. And with, a reasonably, managed beta and theta, let's say, your rigs have a beta of 1, they move in perfectly positive correlation with Bitcoin, and you have, a liquidity option on your rig side, your rig is going to trade in correlation with the price of Bitcoin, and you are producing that yield on the Bitcoin. So it's actually like a safer, more logical, constantly dollar cost averaging strategy to develop yield, to generate a yield on Bitcoin. That's a little bit of a reach of an analogy, but I personally certainly don't think it's illogical. What are your thoughts on that? I'd love to throw that one at you, Joe.
Definitely. I want to go back on the XPs versus J Pros also, but I want to hit on that real quick first. I think what you're saying is exactly right. The way I think about Bitcoin mining is it's sort of an advanced Bitcoin DCA strategy, right? You're basically you're doing two things. You're locking in your electricity costs, which is like your monthly DCA into Bitcoin, and then you're locking in your Bitcoin denominated rewards somewhat, because exactly like we were talking about earlier, difficulty can't really soar that super fast if the price of Bitcoin goes up. So you're basically enabling, hey, if this machine mines 0.1 Bitcoin per month, just making up a round number, difficulty is not going to, 2x overnight. So you're going to slowly be earning the 0.1 Bitcoin month after month. Obviously, it's going to slowly decline, but not super fast. But if the price of Bitcoin is going up, that 0.1 Bitcoin that you're mining per month could go from, $2,000 to $20,000. And so it's kind of this advanced DCA strategy where you're locking in a certain amount of Bitcoin over the next 1 to 2, 3 years. And if the price of Bitcoin goes up, your cost to mine that specific amount of Bitcoin is basically the same, yet that amount of Bitcoin is worth a lot more in dollar terms. So yeah, I think you said it well. It's just kind of an advanced DCA strategy for people that are ultra bullish on Bitcoin.